Hello, everyone. This is the recording for the audit of cooperative societies. I have been recording this video for the third time now, and I really hope now you receive it. There was some kind of technical problem because of which I was unable to upload. I know it is very high time for sending it to you, but I assure if you listen to the lecture very clearly, the self-study to this will be considerably reduced. Okay, so I've tried my level best to give the best which I can for this particular topic so that your end would be reduced. Okay, the efforts at your end would be reduced. So audit of cooperative societies, you all must have understood the meaning of cooperative. That is, you see that where these are working for the members, they will be registered under the Cooperative Societies Act. And basically, these societies are for the purpose of helping the members, where the members are going to, take part in the society by contributing to the share capital, and they'll be able to provide deposits. They'll be able to take loan from the society. One cooperative society could also become a member of another cooperative society. Okay, so membership is possible like that. Here, what we are going to study is that, first of all, what is the requirement of the audit of cooperative societies? Second, which are the key areas where audit will be concentrated on? Then we are going to talk about who could be the auditor or who cannot be the auditor. Then we talk about what is the reporting element regarding cooperative societies. And then we have a concept of multi-state cooperative societies. So you have state cooperative societies, you have central cooperative societies. But there is also called as multi-state cooperative societies, which will be a little bit of exam focus. All right. So we are going to restrict our entire discussion only to these elements. All right. Now, when you talk about cooperative societies, there is going to be a registrar of the cooperative societies. Like how we have registrar of companies. Here you have the body called as the registrar, who will be giving an order in writing, okay, directing very clearly that every registered cooperative society will get the audit done of its accounts at least once in a year. Okay, so it will be the directions coming from the cooperative society. When we talk about cost audit, we know central government will give the direction for the audit to be conducted. On the same lines, when it comes to cooperative societies, you have the registrar who will be giving a direction that when the audit has to be conducted, that means at least once the audit has to be conducted for every registered cooperative society. Okay, so let us try and understand one by one. Things are very simple here. Audit of Cooperative Society, Chapter 19. Audit under Section 17 of the Cooperative Societies Act 1912. So 1912 is the act where every cooperative society has to get itself registered. Like how we require every company to get registered, cooperative societies also are required to get registered. The registrar shall audit or cause to be audited. That means either they will conduct the audit or they will appoint the auditors to conduct the audit by some person authorized by them by general or special order in writing in this behalf that the accounts of every registered society shall get audited at least once in every year. The audit under subsection 1 shall include examination of overdue debts. Overdue debts are nothing but the debts which have become overdue. Every debt will be given a timeline for repayment, right? So if the repayment does not happen within that time, then they will become overdue. Understanding cooperative societies, the members will contribute the share capital. Members only will receive the loans also. So why you focus more on overdue is that, suppose if a particular member is not repaying on time, that means there could be a possibility that this has been manipulated, that more amount is given to him without a proper repayment by him. So there could be siphoning of funds happening. So you have to be very careful when there is an overdue of debt, if any, and evaluation of assets and liabilities of the society. So obviously audits are conducted for what purpose? Their basic idea for the examination of overdue debts, because one of the areas where risk is there. Second, we talk about valuation of assets and liabilities, because that we do as a balance sheet checking only. Then the registrar or the collector or any person authorized by general or special order in writing in this behalf by the registrar shall at all times have the access to the books, accounts, papers, etc. So see, it could be the register has told, it could be the register as suo motu has conducted the audit, or it has directed the collectors to appoint the auditors, or they must have appointed auditors. Okay, some set of people, chartered accountants, to do the audit. So these people, whoever has been given the power to go and do the audit, will have access to every book, every paper, every voucher, every account, everything maintained by the society. This you have already done, because when audit is conducted, the person is going to get the right to conduct the audit or who's going to conduct the audit should have access to every particular document that is required for the process. Got it? Then, first is examination of overdue debts. Overdue debts become very important because usually cooperative societies lend to their members. And when members have been given the loan, the repayment of that becomes very important on due dates. If the repayment is not happening on the due date, it is a possibility that there is some kind of money which has been, given in a very wrong way, or maybe there is a manipulation of the funds of cooperative society. So they could be shown in the form of loans, but they have been used for the personal benefit of the members. So because of which overdue debts will become very important. And if there is overdue debt, there has to be overdue interest also. So overdue interest and accrued interest, both are not same. Accrued interest is the interest on the sums which are already outstanding. Overdue interest is the interest that you're going to calculate on the overdue sums. Got it? So these have to be separately treated. One will be like a penalty, one is an interest. Got it? So what they're saying is overdue debts for a period from 6 months to 5 years and from 5 years shall be classified and shall have to be reported by the auditor. So understand, you have to do two bifurcations. Overdue from 6 months to 5 years, one set, and more than 5 years will be separate. And based on that, the auditor will do a separate reporting by classifying them. The auditor will have to ascertain whether provision has been made for the doubtful debts or not. Depending upon the age, the aging schedule, you will decide what is the provision for the doubtful debts that you're going to create. So the grouping will be 6 to 5 and 5 and above. Okay, then. Overdue interest should be excluded from the interest outstanding and accrued while calculating profit. Very interesting. Overdue interest should be excluded from the interest outstanding and accrued. See, interest outstanding and accrued are not penalty in nature. They are what you have to pay as a part of your loan. But overdue interest is for the overdue balance that you have, the extra interest. So that has to be kept separately while calculating the profit. Overdue interest is interest accrued in the accounts of which the amount is overdue. Okay, so wherever the amount is overdue for 6 months, for 8 months, for 12 months, for 5 years, etc., then you have to pay extra interest for the overdue amount that has to be shown separately. Then, certification of bad debts. The very interesting part of cooperative society is that usually what is the concept of bad debts is that when the debts become irrecoverable, we report them as bad debts. But here in cooperative societies, a bad debt can be recorded as a bad debt only and only when it has been certified by either the auditor or the managing committee that they have become what bad debts. So you have to receive a certificate from the auditor or the TCWG telling that these debts are bad. Only if the certificate is available, then the particular debt can be written off as bad. Otherwise, until then, it can never be recorded as a bad debt. Okay, so that is one thing given here. Verification of assets and liabilities is quite simple. Whenever you talk about assets, the assertion you will check will be what? Existence, ownership, and valuation. Correct? So that is the thing. When it comes to assets, obviously it should be cost as depreciation. When it be current assets, it is cost or NRV, whichever is lower. So cost or market price. All the liabilities, whichever are known, should be brought into account. You simply cannot show them as contingent liabilities. Okay? So that is about assets and liabilities. Other ends to cooperative principle. Cooperative principle, the meaning of this is you have to economically spend. We do government audit, right? So there we have understood that there should not be wasteful expenditure. So whatever expenses you're going to incur, you have to be very, very particular that they are economically done. That means proprietary has to be maintained. That proprietary is nothing but a cooperative principle. It should be benefited to every person. Got it? Then, cooperative society has an act. So obviously rules and regulations will be given. So you have to comply with all the rules and regulation. If there is a non-compliance with any rule and regulation, then in that case, the auditor will do the reporting of these non-compliances. Then restriction on the cooperative society is very important. In case of a society having a limited liability of a member. So if the member's liability is limited, that means limited liability, no member other than a registered society. I told you in a cooperative society, you and I individual can be members, or one society can become a member in another society. So if you and I are members and the liability is limited, then you can hold the capital only up to 20% or rupees 1,000. More than that, we cannot hold. Okay, then. If it is registered society, which is a member, then no problem. Society can hold any amount. But for anybody other than society, the limit will be 1,000 or 20% of the capital. A registered society can provide loan to its members. Obviously, that is the major reason. However, it may provide loan to the another cooperative society only if it is only special permission is given by the registrar. That means you can give it to the others also, but you require a special sanction coming from the registrar. Understanding the cooperative society, everything will be governed by the registrars only. So you require their permission. It may accept loans and deposit from members and other subjects to conditions specified within by laws. Obviously, you can accept it, but conditions will be given. A central cooperative society may invest its funds only in the following. I would request every student to learn these things because a central cooperative society, okay, which is coming by the under the registrars, whenever you are going to take money from your members, that money can be invested only and only in these funds. Reason is very simple, for the sake of security, because whenever you invest in governmental securities, they'll be safe. And that is the reason they call it to be kept only in these things. So shares, securities, bonds, and debentures of any society with limited liability. Securities there. Securities specified in Section 20 of Indian Trust Act. Central or state cooperative bank. Cooperative bank other than central or state cooperative as approved by the registrar. Other permitted by the government. So these are the 5 places where there are pros that you can invest. No other places will be allowed. Okay, then verification of members of registers of members and examination of passbooks. That means who are the members of the society, what loans have been given to them, what advances you have taken from them. All that you can you have to cross verify. And we know we have external confirmation from this, where you could directly contact the members and get the information correctly done. Correct? Then special report has to be prepared. See, whenever there is a doubt in the mind of the auditor that something is going wrong, and he's suspicious about a matter, then a special report has to be prepared. Okay, so what it is telling, in case auditor notices serious irregularities in working of society, he may report these special matters to the registrar. The registrar, on the receipt of such special report, may take necessary action against the society. In the following cases, a special report may become necessary. Please mark it important for the exam. The question could be, when a special report prepared by the auditor in case of a cooperative society. So whenever the auditor is getting a doubt, a suspicion in his mind that yes, there is going to be some kind of profiteering happening, manipulation happening, some personal profit has been taken by the member, etc., then in that case, they are going to prepare a separate report. So your personal profiteering by the members of managing committee. So they're trying to fill their own pockets. Detection of fraud, very important. A specific cases of mismanagement where money is being manipulated, mismanagement of funds are happening, excessive loans are given. Correct? Then, in case of urban cooperative societies, disproportionate advances to the vested interest group. Disproportionate means how much they don't deserve, that much loan you're giving them. Correct? Then, reckless advancing without evaluating credit worthiness, without seeing whether they are really worthy of receiving it, whether they have the capability of repaying it. We are recklessly advancing. So if reckless advancing is happening, understand, cooperative society will lose the kind of credibility. Going concern could be a question mark. Got it? So if any of these things are identified by the auditor, when the auditor comes to a situation where he feels these are the things that are happening, which are very dangerous, okay, then in that case, the auditor has to make a special report to the registrar. So these are the cases of serious irregularities. Correct? Then audit classification, very interesting. Once the audit is completed, once the examination is done, the auditor will give a class. The reward will be given in the form of classes, the class A, class B and all. In that case, you will be reporting and you will award one of the class to the cooperative society. Based on the kind of its activities, based on how well it is maintained, the categorization will be given. And if suppose the cooperative society is not happy with the class awarded by the auditor, then they would apply to the registrar, and the registrar will tell, okay, we'll review the audit or we'll conduct the audit again. So usually we say opinion has to be given, right? So here the auditor will be required to give a class. So class A, B, etc. The class will be awarded to the cooperative societies. If they're happy, no problem. If not, they will apply to the registrar and the audit will be reconducted if the registrar considers it is correct. Got it? Then obviously, we studied that whenever audit report is prepared, you first have to inform the entire audit report to the TCWG. That is nothing but the managing committee in the cooperative societies. Distribution of profit, very important, market important. 25% of the profit should be transferred to the reserve fund before distribution of the profit to the members. Compulsory it is. So 25% of whatever profit you earn in the cooperative society has to go to the reserve fund. Why it is important for us? Because it is given by law, and whether it is complied by the Cooperative Societies Act or not is also the duty of the auditor. So the auditor has to check that 25% of the profit is actually going to the reserve fund or not. Registrar may reduce it, but at least 10% has to be transferred. So the registrar has the power to reduce it 25%, but minimum how much? 10% has to go. Society may use the reserve fund in the business of the society or for some public purpose. Schedule to the report. Schedule to the report is nothing but the extra additions or the additional reporting that we do. So first we have the main report. The attachments to the report will be transactions contrary to the act, rules, or bylaws, so anything done negatively. Sums not been to account, that is omission of data. Material property appearing as doubtful or bad, separate reporting you do. Material irregularity of expenses, realization of money, that is when propriety is not maintained. Any other matter specified by the registrar. So anything which you feel has to be reported separately, you'll make it in the form of a schedule. It will be an attachment to the main audit report. So these are all the requirements as a salient features for the cooperative society. Because there is some problem with required to uploading the videos, I'm stopping this video here and I'll continue in the next video. Okay, the remaining part of this topic.